Welcome to The Explainer, where we break down complex research into clear 5-minute insights. Today, we're digging into a really fascinating study on business news and its very real and honestly very unexpected impact on the stock market.
So let's just dive right into this idea because it's a bit of a mind bender. We all assume that being more informed is better, right? Especially when it comes to money. But what if the news itself has a hidden bias that's actually skewing the whole market? A really deep study into the Korean stock market found something that might just change how you read the financial news.
There's always been this classic debate about what role the media plays in finance. On one hand, we think it makes markets smarter, more efficient. But then, there's this other, more skeptical view.
Okay, so you've got these two competing ideas. First is the informative role. The idea here is that the media is like a clean pipeline, just delivering crucial facts. It helps investors make smart, rational choices, and that helps stock prices get closer to their true value. But then you have the behavioral role. And this theory says the media isn't a pipeline, it's a filter. It creates emotion, it creates sentiment, and it can actually push prices away from their real value. So which one is it? Is the media a clear window, or is it a distorted lens? That is the big question.
To figure this out, a team of researchers dug into a massive data set. We're talking 18 years of articles from two of Korea's biggest business newspapers, the Mail Business Newspaper and the Korea Economic Daily. They were hunting for a clear answer, but what they found? Well, it was a puzzle.
So first things first, they needed a way to measure if all this news was actually having an effect. They used this metric called idiosyncratic volatility. I know, it's a mouthful, but all it really means is this. When a newspaper writes about, say, Company X, does the stock price of Company X start moving around more because of that specific news, totally separate from what the rest of the market is doing? It's a really great way to see if that information is actually getting priced in.
And, their first finding was, well, it was exactly what you'd think. The more a company was in the news, the more its stock price danced around based on that company-specific info. So far, so good, right? This perfectly supports that informative role theory. Case closed? Not quite.
And this is where things get really weird. It's the big twist. Even though the market was clearly absorbing more news about these companies, their stock prices were actually becoming less accurate reflections of their real value. The information was getting in, but somehow it was making things worse, not better.
So, how is that even possible, right? It just doesn't seem to make any sense. If the market is processing more specific information about a company, shouldn't its price become more precise? This contradiction is the core puzzle that sent the researchers digging a whole lot deeper.
All right, so to solve this mystery, the first step was to really understand the kind of mispricing that was happening. Were the stocks being pushed too high or maybe too low?
To figure this out, they use something called the value to price, or VP ratio. It sounds complicated, but the idea is actually super simple. They calculate a company's fundamental intrinsic value based on its financials, that's the V, and then they divide it by its current stock price on the market, the P. If that VVP number is greater than 1, it just means the company's real value is higher than its price. In other words, the stock is undervalued.
And here is the crucial clue they found. The mispricing wasn't random at all. The companies that were getting all this media coverage weren't just mispriced. They were consistently priced below their fundamental value. It was like the news was systematically pushing their prices down.
This discovery led the researchers to the final piece of the puzzle. If the news was causing all this undervaluation, maybe the problem wasn't the amount of news, but the tone of the news itself.
So they did this absolutely massive textual analysis. They took every single article in their 18-year sample and ran it through a special dictionary that flags words as either positive or negative. This basically let them scientifically measure the overall sentiment, or mood, of the Korean business press.
And the results were, wow. They were striking. When they calculated the average tone across millions of articles, they found that the proportion of negative or pessimistic words was 0.133.
Now compare that to the average percentage of positive words, which was just 0.089. Now that might not sound like a huge difference, but when you scale it across an entire market for nearly 2 decades, it reveals a really consistent and significant pessimistic bias in financial reporting.
And when you see it visually like this, it becomes so obvious. Year after year, the bar for negative words is just consistently higher than the bar for positive words. The business press, whether they meant to or not, was just painting a gloomier picture than a rosy one. And that solved the puzzle. The authors concluded, and I'll quote them here,
the pessimistic tone of the Korean business press is associated with stock undervaluation. Basically, this constant negative vibe was putting downward pressure on stock prices, which led to that systematic undervaluation they saw. The behavioral role of the media was clearly the dominant force here.
So, what's the really crucial point here? This study seems to reveal what you could call a dark side to the media's role in the market. It shows that it doesn't just passively report on what's happening. Its tone can actively shape financial reality.
So what's the big takeaway for all of us? It's that sentiment doesn't just reflect what the market is doing. It can actually drive it, and a lot of times in the wrong direction. For any investor, this is a huge reminder to read past the headlines and really, critically, question the tone of what you're reading. It's not just about the facts, it's about the feeling.
And that just leaves us with this one last big question to think about. We've seen how the tone of the news can literally impact something as concrete as stock prices. It really makes you wonder, what other, less measurable realities are being subtly shaped every single day by the stories we consume? Thanks for watching.